Hey everybody, I want to start by suggesting that you go watch my first time buyer playlist in the playlist section right after you watch this, and also subscribe to the channel. It's going to teach you everything I would want to know about the mortgage process if I didn't know anything at all. It's an hour long. It's broken up into 3 parts. And then if you watch it on 1.5 speed, it's only 40 minutes. So watch it in your downtime, watch it on the way to work somewhere, on the bus, train, in an airplane, wherever you can. But first off, what I'm going to talk about today, ask a lender, okay? Never assume any of this stuff yourself. We do this all day long. We know what not to do and what to do. And also every scenario is different for everybody, okay? But really ask a lender, ask myself to confirm all this stuff. It's just like if you were coming to my town for the first time and you didn't know where to eat, well, I would be able to tell you the best places to go to eat and what places not to go eat. And if that's in Northern Virginia, well, then I'd tell you Sweetwater, Coastal Flats, the Great American restaurants, those are the best. But anyways, let's get into it. Number 1, you want to build your credit, okay? You want to have a credit card line or 2, maybe a car loan, student loans, anything helps. You don't have to have all of them. You might only have to have one for at least a year, but the more the better. Number 2, don't miss your payments. Don't be a dummy. Don't have any self-inflicted mistakes here. Number 3, savings. I think you want to save up at least, let's say, 5% of the purchase price. 3% down is very doable once you have that, because once you have 5%, then you have most of your closing costs already paid for. Now, 0% down is doable as well, but usually comes with a little bit higher rates. Number 4, ask your family for money. It doesn't hurt to ask. You never know if you can get that until you ask. Number 5, if you need savings from somewhere else, research your 401k takeout. Okay, go and contact your retirement plan provider and see what the rules are on taking money out. See what the different ways of doing that are. See what the tax implications are. See when you have to pay that money back by. See what kind of penalties there may or may not be. Number 6, no job gaps of over 30 days. Okay, this can especially doom you if you're going to get FHA financing. Number 7, if you're self-employed, it might be better to have a guaranteed W-2 base salary. Come and talk to me about that if you're in that boat. Number 8, apply, okay? You never know if you qualify until you actually complete an application with a lender. Okay, we run the entire file that you have through the servers at Fannie Mae and Freddie Mac, and they come back with an approval, a yes or no, based on what metrics that you have. We don't fully know until then. Okay, you might assume you can, but there could be some pitfalls that you don't realize, especially with small items on your credit report and mortgage underwriting. But you need this application pre-approval letter, this note from Fannie Mae and Freddie Mac that only a loan officer can give you before anyone is going to be willing to sell you their house. Without it, you're toast. Forget it. Number 9, delay major purchases. If you're going to finance something, let's wait until after you close on your house. If not, it could reduce the maximum home payment you could afford and thus keep you from buying a house that your spouse really loved. Number 10, don't lose your job. Keep that until at least the day after closing. And finally, number 11, just be patient, okay? It can take a year or 2 in some cases for you to qualify or for you to find a house that you really love. Your loan officer, I'm really trying to help you, okay? It might seem like a lot of work or, waiting. It might seem like, some harassment, but look, we're really there for you. You do really have to follow these rules if you really want to get the best rates and not have to get some ridiculous hard money loan where the rates are all 2 and 3% higher and where the closing costs are double and triple. And P.S., don't worry about perfecting your credit balances yet. What you have is what you got. After you apply, we can tell you how much you can pay some credit balances down by X dollars to improve your credit score by Y points, and then to improve your pricing and monthly payment by Z amount. But guys, that's it. If you do these things, you'll maximize your chances of being able to buy a home. Thank you.